Hi, what's going on? Welcome back to Dapper Dividends. McDonald's put out their earnings. We're going to talk about it, break it down. We're continuing our cold sore series here on Dapper Dividends. So let's get into McDonald's. So McDonald's did have a Q3 beat, but Q4 not so much. They missed on earnings, they missed on revenue. Earnings were $1.70 versus $1.77 expected for a negative 4.76% surprise. And revenue, closer but not quite there, was expected at $5.31 billion, and they clocked in at $5.35 billion, missing for a surprise of negative 0.69%. Now the comps, let's talk comps. All right, so let's talk same-store comps. They did have strong U.S. comps at plus 5.5%, which was up from Q3 comps of 4.6%. They had ended Q3 strong with same-store comps, which were the best in nearly a decade. However, the end of September was really successful, but they did see the end of the Travis Scott deal and COVID cases surging once again. Q4 was helped out by the J Balvin meal deal, the exclusive digital deals they offer through their app, which is the way that all these companies are trending. You gotta go digital. That's where the deals are. The McRib, buy one, get one, and the new bakery line from McD's Bakeries. Now, McDonald's did end the year with 6 straight months of positive same-store comps. And January comps are up high single digits already, and that has been bolstered by obviously consumers receiving their stimulus checks and bringing them to McDonald's, which, as I preach on this channel, they're getting stimulus checks. I invest in McDonald's. I'm getting a portion of their stimulus money back to us. It is so important that you save and invest your money in wonderful companies like McDonald's. So the international comps were mixed, with the international operated markets comps were down negative 7.4% in Q4 from negative 4.4% in Q3, while the IDL, or the International Developmental License markets, improved to negative 3.6% in Q4 from negative 10.1% in Q3. It's still negative, but it's improving. It's going in the right direction. So the IOM segment did see positive comps in Australia and the UK, but negative double-digit comps in France, Germany, Italy, and Spain. And this is from the additional restrictions that went into effect in late October, which are obviously going to hurt the comps going forward in those regions. But I really like the strong US comps. This is McDonald's largest market. And looking ahead to quarter two in this year, they're easily going to lap and beat the quarter two comps from last year because of the pandemic that was just beginning to come upon us. It was descending upon us, and everything went to hell in a handbasket. So check this out. On February 1st, McDonald's is bringing back the spicy chicken McNuggets and the mighty hot sauce. And then they are also, if that wasn't enough, putting on the gloves. They're going to box it out with Popeyes. They're entering the crispy chicken sandwich wars, as it were. They're bringing out 3 iterations. They have the classic, the deluxe, and the spicy crispy chicken sandwich. So that's a little bit what's going on. We're dividend growth investors around here. That's what we do. That's how we do it. And the current dividend payout ratio on Simply Wall Street is at 76%. But I took the trailing 12 months from the cash flow statement on Yahoo Finance, and I find an 87.64% free cash flow payout ratio, which is a little bit high. I'd really like to see that under 70%, but we are still having the pandemic, the aftermath of the pandemic factored into that free cash flow trailing 12-month number. Now, you know me, get used to it. You're going to see it a lot. I love the ICR. I love the interest coverage ratio. Their current interest coverage ratio is cutting it razor thin for me. I like to be at 5. They are at 6.06. This is when you take the operating income divided by the interest expense, and this is exactly how many dollars of operating income you have to cover every $1 of interest expense. They're at $6.06 of operating income to cover every $1 of interest expense. That still is above my threshold, but man, are they getting close to that 5. Simply, Wall Street has a valuation of $174.19 at the making of this video, making McDonald's about 18% overvalued. So I love McDonald's because they are ubiquitous. They are everywhere. First and foremost, they are a real estate company. They own all the land, most of the land. They obviously don't own the airports. Most of the standalone McDonald's, they own the land that those buildings are sitting on top of. So they play landlord in addition to receiving kickbacks as the franchisor. And I love McDonald's. I want to buy more. I was buying heavy. I was going hard when they were in the 150s. Anything under 190, I was buying. So if you're a trader, my heart goes out to you, but I'm a long-term buy and hold dividend growth investor. I am thinking infinite. I am thinking not in terms of years, but in terms of generations. I'm trying to build something that my grandchildren will take and benefit and be a part of. So get that long-term focus, get that infinite mindset going ahead. Don't just think short-term. And I'm going to be buying more McDonald's if they drop. And expertise comes from the community. Let me know what you think in the comments below if you own McDonald's. If you're going to buy McDonald's, what would you like me to talk about? Please let me know. Like and subscribe if you got value from what I'm talking about here. Follow me on Twitter at RustyRam78, on Instagram, doing the IG thing. At Dapper Dividends is my handle there. And I started a Discord server, which you can find in the links below. Just really low key. If you have anything you want to say, a couple people have straggled in from some of my Twitter friends are in there already. And that's really all I have to say about that. That's all I have to say about that, Jenny. I will talk to you in the next video tomorrow.